Today's market was not weak, but it was also not strong. Nifty opened with pressure, tried to bounce, failed to break higher levels, and quietly closed flat. But here's the real question. Is this just a pause before a breakout? Or is smart money silently distributing near 26,000? Stay till the end, because the levels and VIX behavior today are extremely important for the next move. Welcome back to Wealth Maama, where we don't chase noise, we read price, data, and psychology. Let's break down exactly what happened in today's market, with numbers, logic, and clarity. Nifty started today with a gap down opening near 25,930, compared to Friday's close of 26,046. Early selling pressure dragged the index down to an intraday low of 25,904. But importantly, buyers defended this zone aggressively. From there, Nifty slowly recovered through the session and made an intraday high near 26,047, but failed to sustain above 26,050, showing clear hesitation near higher levels. Finally, Nifty closed at 26,027, down just 19 points or 0.08%. This kind of close clearly tells us that today was not a trend day, but a range-controlled, indecisive session. Market breadth also reflected this hesitation, with 22 stocks advancing and 27 declining, a slight negative bias. Why market moved this way today? The biggest reason for today's muted action was absence of fresh triggers after last week's strong rally. Global markets were stable but not supportive enough to push Nifty higher, and domestic cues were largely neutral. More importantly, after closing above 26,000 last week, traders were cautious about buying at higher levels without confirmation. This led to profit booking in pockets, while selective buying continued in strong stocks. In simple words, today's move was driven by price digestion, not fear. Sector-wise performance. The IT sector showed mild strength today. Stocks like HCL Tech and Wipro ended in the green, supported by stable rupee and short covering after last week's underperformance. Consumption and FMCG stocks also provided support. Hindustan Unilever and ITC saw buying interest, indicating that traders were rotating into defensive names as the index struggled near resistance. On the flip side, auto stocks saw profit booking, with M&M and Eicher Motors under pressure after recent rallies. Banking stocks remained largely muted, keeping the index capped near 26,000. Overall, today's sector behavior confirms one thing: rotation is happening, not exit. Quick reminder: if you want daily Nifty analysis with exact levels, market psychology, and zero hype, make sure you're subscribed to Wealth Maama. This channel is built for serious traders, not gamblers. Now let's look at the stocks that actually moved the market. Out of the Nifty 50, 22 stocks closed in the green, and the leadership came from a handful of strong, stock-specific movers rather than broad-based buying. Indigo topped the gainers list today, closing around 4,960 rupees, up by nearly 2.0%. What stands out here is that buying continued despite a flat index, clearly indicating stock-specific strength and institutional participation, not momentum chasing. Trend gained close to 1.2% and ended near 4,125 rupees, showing that consumption-focused stocks are still attracting selective buying even when the broader market is consolidating. Hindustan Unilever moved up by about 1.2% to trade near 2,288 rupees, reflecting defensive positioning by investors during a low volatility, range-bound session. HCL Technologies advanced roughly 0.79%, supported by stability in global tech sentiment and short covering after recent underperformance in the IT space. Wipro also closed higher by nearly 0.73%, reinforcing the view that IT stocks are seeing selective accumulation rather than aggressive breakout buying. Overall, the top gainers clearly show rotation into defensives and stock-specific strength, not a broad risk-on rally. On the downside, 27 Nifty stocks ended in the red, but the losses remained controlled and largely driven by profit booking. Mahindra & Mahindra slipped close to 1.9%, closing near 3,610 rupees after its recent rally. The selling appears to be healthy profit booking rather than any change in the broader trend. Eicher Motors declined by around 1.56% to trade near 7,116 rupees, reflecting cooling momentum in auto stocks following recent strength. ONGC fell approximately 1.2%, closing near 235 rupees, as energy stocks faced mild pressure in the absence of fresh triggers. Bajaj Auto moved lower by about 1.04%, continuing the consolidation phase seen in the auto sector. JSW Steel ended down nearly 1.02%, impacted by mild weakness in metal stocks after last week's gains. Importantly, none of these losers showed aggressive volume expansion, which confirms that today's decline was orderly and non-threatening to the overall market structure. India VIX rose today to 10.25, up about 1.4% compared to Friday's close of 10.11. This rise in VIX, despite a flat index, clearly indicates uncertainty and caution among traders. However, VIX is still very low historically, which means fear is not present, only hesitation. Low VIX and sideways index gives a range-bound market ahead. Support and resistance levels. For Nifty, the immediate support zone lies at 25,940, followed by strongest support near 25,850. As long as Nifty holds above 25,850, the broader structure remains intact. On the upside, 26,080 is the first resistance, and 26,140 is the major hurdle. A clean break and close above 26,140 will open doors for fresh upside momentum. Till then, expect range trading and traps. Since today is Monday and the market ended flat after last week's rally, the probability favors consolidation rather than immediate breakout. If Nifty sustains above 26,080, bulls will attempt a move towards 26,140 and above. However, if selling pressure pushes Nifty below 25,940, short-term weakness can extend towards 25,850. Tomorrow's trade will be level-based, not emotional. That's it for today's daily Nifty analysis. Also, keep an eye on the ICICI IPO-related updates, because this could become an important talking point in the coming sessions. If this analysis helped you understand the market better, like, share, and subscribe to Wealth Mama. And I'll see you in the next market update.